Welcome everyone, and thank you for joining today's session, Sales Tax Planning for Holiday 2021, 5 Steps to Stay Compliant. We're here to help you learn a few steps to make it a better sales season during the holidays without having to worry about sales tax and focusing on generating revenue for your business. My name is Matt Hammond. I've been at Avalara a little over 6 years now and talk about sales tax almost 6 days a week. So extremely versed in the space and have worked with a lot of companies that needed to evaluate what states they should collect tax in and just really how they can scale their business as they're growing and going into new markets. Now, what we're going to cover today are a few things. And again, I want this to be this is going to be a very informational session. You should get some great things to learn, takeaways, and then also evaluate your business for really where you should be collecting tax and what you need to know. So first, we'll cover the recent shifts in consumer shopping habits. We're then also going to deep dive into nexus, what it means, how it impacts your business, and make sure you have a better understanding of what states you should be collecting sales tax in. We'll dive into the reasons retailers should add sales tax compliance to their holiday prep plans. And then we'll also cover the 5 steps to stay compliant. And staying compliant is one thing, getting compliant is a completely different one. So we'll touch on all those throughout the session today. So when we dive into what has changed over the course of the last couple of years, to be very honest, e-commerce has just boom. I mean, it's increased so much in the last 2 years. 63% of consumers do all their shopping online. And look at a couple of these statistics. The sales rose 39% in Q1 for 2021. So why that's important is as companies are switching to e-commerce or potentially had to close a brick and mortar location, they're now having to sell online. And that has some very, very important details when it comes to sales tax and also compliance. Now, companies are almost always going to be selling omni-channel. They have different ways where people can buy their products. Today, we're going to help understand and dive into what that means for your business and what you need to be aware of as we go into the holiday season, because we're seeing significantly higher traffic to websites and surges in e-commerce sales. Now, let's talk about this for a couple minutes. And these are some really wild statistics just to look at the numbers here. Almost $1 trillion in e-commerce sales in 2021, almost 14% growth. 6.8 trillion in retail sales for 2021 as well. Now, the companies and the industries we're seeing significant increases in apparel as well as home furnishings. And those two industries are going to see monumental growth throughout the holiday season because you have people coming to your house and gatherings and whatnot. So very important just to recognize how quickly and how fast e-commerce has grown, and it's basically for the past 5 years it's lifted off, and we're seeing a huge growth for companies that haven't sold e-commerce before and are starting to now, and that's why we need to have the conversation during the session today for what the holiday season is going to mean for your business. Now, it all starts with nexus, and there's probably a few folks on the session today that have never heard of the term nexus, and that's okay. I happen to talk about it almost every day, so I'm very knowledgeable in the space, and what I hope is you'll understand more once we cover the next few slides so you can have a grasp on what states you should be collecting sales tax in. Now, the term nexus is an industry term. That means you've established some sort of physical presence or a connection to a state that then grants you the obligation to collect, file, and remit sales tax moving forward. So what I want you to do is I want you to look at your business, wherever you're located, and I want you to see if, and just ask yourself if you have any of the triggering activities on the right side for your business outside of the state you're located in. So do you have a physical presence in a different state? Do you have employees, inventory? Do you go to trade shows? Do you drop ship products from one state to the next? These are the most common nexus building activities that require companies to have to get registered outside of their home state. Now, nexus, there's a couple different types of nexus. There's traditional physical presence nexus, which are the majority of the ones on the screen. And then we also have economic nexus, which we'll dive into here in a couple minutes. So everything changed roughly a little over 3 years ago. And what happened was on June 21st of 2018, the Supreme Court made a decision in the South Dakota versus Wayfair court case that overturned the physical presence ruling. Now, what happened was South Dakota went to the Supreme Court and said the way people buy and sell products has drastically changed over the past 15, 20 years. So we want you to change the rules. And they actually ruled in favor of South Dakota. And they allowed individual states to put together their own economic thresholds that would then require remote sellers to have to get registered to collect and remit sales tax. And the way I like to phrase it is, as the seller, you no longer control where you collect tax. And that's a scary thing. If you sell a certain amount into a state, or you have a lot of sales to a certain state or a certain geographic area across the country, and you never go to those states, you ship your product via common carrier, you're now going to have to get registered for sales and use tax. And this will make sense here in a minute when I outline some of the features and some of the thresholds. So just bear with me for the next couple slides. I promise it'll make more sense. Now, most of the economic nexus thresholds, the majority of the states, as you can see here, are $100,000 or 200 individual transactions. There's a couple states like California, Texas, and New York where they have a high threshold of $500,000. But the majority of the states, if you do $100,000 in sales, you're now required to get registered to collect and remit sales tax moving forward. And Avalara has a great sales tax risk assessment on our website where you'll pop in some sales data, and then we will give you a report that will show where we believe you should be collecting and remitting sales tax. Now, this is based on a calendar year. And again, most states it's $100,000. So what you need to look at, and what we have most of the companies looking for during the holiday season, is a way to track their economic nexus, because you have to do it by hand unless you're leveraging a sales tax vendor. Now, here's a great example. We talked a few minutes ago about companies that are selling on multiple different channels. You have a web store, you have a brick and mortar location, you sell on a marketplace, you take phone orders, and you invoice solely out of QuickBooks. In this example, all their revenue across all their channels totals $115,000 in sales, and they also did 230 individual transactions. So that would mean in the state of Michigan, they would have to get registered for sales tax purposes. So you have to look at all the avenues and all the channels you sell on, take your total sales combined, and see if you've crossed any of these thresholds. It's very important to evaluate this now as we go into the holiday season, because then you can be registered and start collecting, filing, and remitting before it's too late. We see a lot of companies that have come to us, and Wayfair happened 3 years ago. I can't tell you how many companies we've talked to lately where they're calling in and it's been 3 years and they realize they have to get registered in 20 states. So again, now's the time that you want to take the proactive approach, as opposed to what historically everybody has been reactive to sales tax and reactive to compliance. So now's the time to evaluate everything. So why should you add sales tax compliance to your holiday strategy? Well, you have to think about it like this. We're entering the time of the year where some companies and industries have the biggest and the largest amount of sales. So they're going to see so much traffic during the holiday season where that may be where some companies and industries make the majority of their sales, and they rely on it. Now, one thing's important, and I think I mentioned I've been at Avalara a little over 6 years, so I've had this conversation quite a few times. It's all about the buyer experience. You want companies to go onto your website, browse your category, look at your products, add to cart, finish the cart, and actually purchase, and then either come back and be a repeat buyer or go tell their friends what they bought, and then they come to your website because they had a good experience. Now, this is an interesting stat. 49% of shoppers abandon their cart because they consider taxes and shipping and fees to be too high. Now, why is that important? Number one, you want to have accurate sales tax calculations. You want to make sure you're determining if shipping is even taxable. Shipping and taxability of a delivery of a product can change from state to state. But what we see is, the goal is to reduce risk of them abandoning the carts. You want them to actually check out. You want them to have a great experience so that they will then come back. So a lot of these things we're going to talk about today, you have to be thinking about in the eyes of the buyer. And if you charge the wrong tax, then you have to go back to them a week later and tell them you need $2 more or whatever. You want to avoid those types of situations. And it's very important where companies are looking and businesses are trying to sell on additional marketplaces, right? Amazon, Etsy, eBay. Those sales can also contribute to the economic nexus thresholds. So just one of the things to think about. And additionally, think about accommodating growth and change. Holiday shoppers spent $201 billion, $201 billion November and December of 2020. So they grew almost 45%. That just helps quantify and show how much and how important this time of the year is for your sales, and also being prepared from a sales tax perspective as well as compliance. Additionally, drive efficiency and reduce cost. There's over 13,000 taxing jurisdictions across the US. Every state is different. There's 45 states plus Washington, D.C. that actually collect sales tax. And what we're seeing is online selling has opened up new channels. Companies have a new way to get their product out there. If they had a brick and mortar location and they had to close that in 2020, they're selling e-commerce. And so now's the time where you really need to be thinking about automation. You need to be thinking about reducing costs, driving efficiency. It doesn't make sense to spend time filing sales tax returns, researching rates, trying to input rate tables on your website. Now is the time of the year where you want to focus on driving revenue generating activities for your business, because it's going to be the most important. And now is definitely the time. And I'm glad we're on the session today. And hopefully everybody will have a significantly better understanding for what states you should be collecting tax in. Now, I mentioned there's 45 states that collect tax. 45 of the 46 have adopted economic nexus. And again, we're in the era where you no longer control what states you collect and remit tax in. Your customers are effectively driving your sales tax profile. And I know some people are like, Matt, what are you talking about? If I sold $100,000 worth of product into South Carolina and I've never gone there, I have to get registered. If I did 200 individual orders or sales to South Dakota, I have to get registered for sales tax. So the days of having to collect and remit sales tax in 1 or 2 states, they're long gone. We're seeing on average, most companies are having to get registered in 15, 20, even 30 plus states to collect sales tax. And that can be quite burdensome and challenging if you're going to try and do that in-house. Now, online sellers need an automated solution to keep up to date with sales tax holidays, rates, rules, boundary changes. Those are all things you don't want to have to spend time on while you're in the holiday season or while you're extremely busy. So just keep that in mind. All right, so now what we're going to talk about is the steps that you can take for proper tax compliance. And I'm going to highlight the 5 things that are important, and then we're going to dive into each one individually. So number 1, understand where you should be collecting and remitting tax. That is the first and foremost most important thing. Number 2, register to collect and remit sales tax. Get tax IDs in these states so you can legally start collecting and remitting sales tax. Number 3, calculate the proper amount of sales tax. We'll spend a couple minutes on that one. Number 4, track and manage exempt sales. That's really important when it comes to, heaven forbid, you go through a sales tax audit. And then number 5, remit the sales tax. So filing and remitting sales tax returns. Fun fact, I've never met anybody that likes filing sales tax returns. It takes up way too much time, and most people would rather be playing golf or doing some holiday shopping when it comes to the end of the month. So these are the 5 steps to managing tax compliance. And now we're going to do a deeper dive into each one of them. So step 1, know and understand where your business must collect and remit sales tax. This is the most important. It's all driven by your company profile, where you have employees, inventory, traveling sales reps, contract employees, wherever you have inventory, if you have that in multiple states. That's what's going to drive what states you should be collecting and remitting sales tax in for sales tax purposes. And then additionally, the economic nexus piece. So now's the time where you want to evaluate and look at your sales from either 2020 or year to date and see if there's any states where you've done over $100,000 worth of sales in. And if so, you're going to want to start the registration process. Now, what's involved in getting registered in a brand new state for sales tax? Number one, if you're having to get registered in a state for economic nexus purposes, you simply just need a sales tax ID. So you need a sales tax ID so you can legally collect and remit sales tax. You can go on the Department of Revenue website and apply for a tax ID or leverage a sales tax vendor. Now, here's some items that are typically needed, and I'm not going to read all of them, but you can see them. You need what type of business, your legal business name, social security, projected monthly taxable sales. These are all things that are going to come up when you get registered. And why that's important, and I'll talk to you a little bit towards the end of the session today, the states determine your filing frequency based on your projected sales. So that's why they ask that. And then they'll determine whether you're monthly, quarterly, annually, or semi-annually filer in their particular state. Step 3, make sure you're calculating the proper amount of sales tax. There's over 12,000 taxing jurisdictions across the U.S. Every state's different. Every state has different rates, rules, boundaries, taxability, and you're going to have to make sure you're calculating the proper amount of sales tax in your shopping cart, in your accounting system, if you're doing phone orders, your point of sale, wherever you're taking sales and or completing a sale or having to calculate tax, you have to make sure it's accurate. Calculating sales tax is one of the things that most people historically have relied on rate tables or just calculate tax on a zip code. Now, rate tables and zip codes aren't accurate, and they also don't determine if what you're selling is taxable or not, which is a perfect segue into step 3 continued, is the taxability challenge. Now, I'm not going to read all these, but look at some of these examples. If you get a bagel in New York and it's sliced, it's taxable. Candy bars in Indiana, the taxability of candy bars can vary based on the amount of flour content, where it's either treated as a candy or a food item. So every state's taxability and how they treat the taxability of products and services varies from state to state. So this is also very important when it comes to calculations on the website and also when you're invoicing somebody inside of your accounting system to determine whether or not the product or service you're selling is taxable. This takes a lot of time. This is also one of the things a lot of people want to automate. Step 4, and this is a big one. Almost a lot of the conversations we have, this comes up quite often. Well, 90% of our customers are exempt from sales tax, so we don't have a sales tax issue. That may be the case. However, for those 90% of those customers, you have to have a certificate, an image, a document on file to prove why you didn't charge them tax. So if you're registered in a state and you sell to a institution, a government entity, a university, what have you, or just someone that's reselling your product, they're always going to say, hey, we're not taxable. We don't charge us tax. Great, no problem. In order to do that, we have to collect your exemption certificate because you as the seller are responsible for having the certificates on file, making sure they're accurate, up to date, valid, they're for the right reasons, the right state, and you have them stored. Some states, exemption certificates expire every year. Florida, Washington, D.C., and Washington State, their certificates expire every year. So the minute that certificate expires and you don't charge them tax, you're out of compliance. Now, a best practice I've heard from some external folks at Avalara, CPAs, and accounting articles that I've read is, even if it's in a state where you're not registered for sales tax, if it's an exempt customer, get the certificate up front. Get the certificate, and then if you cross the economic nexus, you already have it on file. And again, it's best practices and it's documentation, so you can provide a reason why they were not taxable. So exemption certificates is a big piece of the puzzle. Step 5, this is the one that I said nobody likes doing. So filing and remitting sales tax returns. I mentioned a couple minutes ago that the states will determine your filing frequency as well as the forms you file. Now, they base those frequencies and projections for your taxable sales, your total amount of sales in a state. It's based on what you think you're going to do. Now, if they start you as a quarterly filer or annual, and then you remit a bunch of tax, they reserve the right to change your filing frequency whenever they want. Now, most states will probably start you quarterly, and then if you have a high amount of sales, they may move you over to monthly. But in addition to that, step 5, you have to pull the data from all your platforms. You have to understand the prepayments in California, the timely filing discounts. The states like Louisiana, Colorado, Alabama, they have local sales tax registrations, local sales tax returns, remitting local taxes in addition to the state tax return. So in Colorado, you may file a state return for the DR 100 form, but you have employees in Breckenridge and then also another city in Colorado where you may have to get registered at the local level and then also file and remit a sales tax return at the local level as well. There's only a couple states that are like that. Again, Colorado, Louisiana, and Alabama, those are home rule states. Those are the ones that are very challenging. If you have a business in those 3 states, you've probably come across some quite cumbersome components when it comes to sales tax filings. Now, in addition to that, the nuances of the remittance, right? You have paper remittance versus online, varying remittance due dates. California, I mentioned, has a prepayments. You'll get tax notices from a state. If they send those over to you, you have to respond to them. We covered the local jurisdictions, late payment fees, different types of payment method. These are all things that each state is different, and you have to be thinking about this as you're getting registered in new states. I'm a firm believer in do what you do best and outsource all the rest. Filing the sales tax returns is no different. Now, one of the key components is states. There are states where if you file the sales tax returns on time, they'll give you timely filing discounts. So they'll give you a discount on what you owe on the upcoming month. So just keep that in mind when it comes to filing and remitting sales tax returns. If you do 1 through 4, great, but then you forget to file a return, it's all down the drain, right? If you miss a filing, then you're going to potentially have to back file, and that just becomes quite cumbersome, and then you potentially owe the states some additional money. Now, a little bit about Avalara. We're the industry leader in tax automation. We have a tax compliance suite. AvaTax is our core product where we integrate to your accounting system, your shopping cart, where our tax engine will effectively calculate tax whenever you need it to be calculated. We can also then store, maintain, validate, and manage the life cycle of your exemption certificates if you have exempt customers. And then we touched on the filing and the remittances. So we can file the returns, handle the payments. Again, we can help you as much or as little as you need. But the goal of the session today was to really point out and make sure you have a better understanding of Nexus, a better understanding of the 5 things to think about when you go into the holiday season, because companies are going to see monumental growth for their online sales over the course of the next couple months. And you have to keep that in mind, and you have to be proactive and identify and evaluate what states you should be collecting tax in. So I want to finish with this. Number 1, sales tax nexus. Nexus means you've established a presence or a tie to a state where you have to get registered. Once you get registered, you have to start collecting tax. Once you start collecting tax, you have to file and remit tax. If you have exempt customers, you want to make sure you have those certificates so that you can provide that documentation. You can learn more on our website at avalara.com. I think we touched on you can fill out the risk assessment where you can put some information about your business, and it will compute a report to give you effectively like a homework checker, so you can get a better idea of what states you should be collecting tax in. And then if you'd like to schedule a consultation, we can walk through what your obligations are, dive into economic nexus, traditional physical presence nexus, and really get an idea of how we can help and put together some sort of automated solution. So best of luck during the holiday season. Be prepared, get ready for the sales, and thank you for the time today.